Hello and welcome to FinTech Insider Insights. I'm Rachel Pondian, Ventures Product Lead at 11FS, and in this episode, we are discussing ESG, environmental, social, and governance in financial services. It's a term most of us have heard, and it has become a little bit of a buzzword or a catch-all term to represent climate-conscious action and social responsibility. But ESG isn't just a cultural zeitgeist, and in fact, issues around climate change, gender parity, and corporate culture have also become key political battlegrounds around the world. These issues matter, and they resonate with huge numbers of people. But what have we actually done to move the dial in making our industry and our world a more sustainable and equitable place? As banks and other financial service providers invest more and more into ESG programs, we want to take a look at what our industry has done and what it continues to do as ESG becomes ever more important to customers. From new banks targeting environmentally conscious Gen Zers to how more established banks might implement the changes needed to build ESG into their culture, we're going to discuss how financial service providers are driving meaningful change and the challenges they still face in doing so. Plus, we'll look at the role of financial services can play on a global stage to help achieve the UN Sustainable Development Goals. So I'm so excited about this, and to have this conversation, I'm joined by an amazing panel of experts. So firstly, I'm delighted to welcome Lisa Stanley, co-founder at Good With Money and Chief Sustainability Officer at Xero. Welcome to the show, Lisa. For those who don't know, do tell us a bit about yourself and what you do.
Thank you, Rachel. I've been working in financial services, core financial services for 25 years now, and the last 15 of those really working at the intersection of ESG and financial services sustainability. So I moved into a role at Triodos Bank, which is one of the UK's greenest banks. That was in 2010. I then set up goodwithmoney.com in 2016. And then after 4 years living in Thailand, I recently moved back and I've started work at Xero FinTech, which is really exciting. It's a startup with the ambition of reinventing digital banking so that it suits the needs of, the current generation and the generation that really needs to put the planet first. So very exciting, and we're hoping to launch later this year.
Amazing stuff. And we'll definitely be talking a little bit more about Xero later in the show. It's also a pleasure to be joined by Gail Galley, co-founder at Project Everyone. Hello, Gail. Please do tell us about Project Everyone and all of the work that you're doing there.
Hi, nice to be here. Definitely feeling unfinancial, but I'm sure you can fill in those gaps. So Project Everyone is the communications unit dedicated to the SDGs. We set it up with filmmaker Richard Curtis 8 years ago now, in fact, maybe even a little bit longer, in order to launch the SDGs and make them from the off publicly understandable and communicable. And the aim really is to make everybody feel that they are the plan to achieve a better world. So we've been doing that. And then in the last, 3 or 4 years, I suppose I've been much more deeply focusing on the climate and nature goals and working deeper into the private sector and the finance sectors to really work out what it is that we need to do differently to get the progress that we need. Because headline, we're not doing well enough. We're not going fast enough. And we need the finance industry to wake up and get on board. So I'm delighted to be here.
And you said you weren't financy. Well, we've got an amazing show ahead of us, so I think let's just dive in. So I think it's best that we start off by taking stock and discussing where we've come to in the past few years up to now. And Lisa, I'd like to start with you first. First question, just a small one. What do you think the current state of ESG in financial services is?
I think it's come a huge way over the last 10 years, particularly in the last 5 years. So with Good With Money, we've seen a huge increase in interest during that time, probably started with the Fridays for Future and obviously the launch of the SDGs, COP26, and all of that momentum has created a need and a wake-up call for the financial services industry to really start to consider how they are positioned for the future, because climate change isn't going away. We've had the news today about another record-breaking month of heat. The UK's had another record-breaking month of just all-round awful wetness. And I really sort of, what is the financial services industry able to do? What are they going to do? I think there's incoming regulations which will make a good difference, but it's a little bit sort of, we haven't moved fast enough, as Gail said about the SDGs. Progress is happening, but it's just not fast enough. And really, there's so much regulation, particularly this year. It's a little bit of an alphabet soup. So if you're a consumer, if you're working in the industry, you really don't know where you are and where we are against those goals globally. So really, what is going to make a difference for climate change?
Yeah, and I think it's really important to start with climate change because we've definitely seen some of that regulation come to the forefront, especially with all of the regulation around reporting, companies having to declare at the end of the year what their performance is, how they're investing their money, how green or not green, as the case may be, some of their operations are. But what do we think some of the biggest barriers are that are still holding financial services back when it comes to improving their ESG credentials? Gail, I'm not sure if with your work and seeing at the lack of pace perhaps with some of these organizations, what do you think some of those barriers are?
Well, so look, I said it and I meant it. I'm not a finance person, so I'm not about to give a decent answer in terms of any kind of mechanic, any financial mechanisms or regulations. What I do see, though, is an ongoing inability at leadership level to really grasp up the scale of the problems that we're facing. Because if that was being done, with that would come, I think, an incredible excitement at the sense of opportunity and importance that the finance industry is going to play. What I do see from people who work in finance is two things. One, they're really clever. And two, they're really egotistical, right? And they're competitive, actually, three things. And they're competitive. They want to win. I'm good with all of that, right? I'm delighted to see clever people. Competition is human, and a sense of ego based on achievement is also fine. So I'm hopeful that those three things get put together and say, as Lisa was saying, climate change isn't going anywhere. It's getting worse. It's rampaging. We think it's suddenly getting worse because we're having wetter summers and we're having warmer winters. You look at anywhere in the rest of the world that is the first way, way, way earlier and greater impacted than we have been so far. And this is just life. And I find it very odd that these clever, egotistical, competitive people are not grasping the challenge at a leadership level. And what I see as the biggest barrier is this attitude that takes people into an MVP, but that is not the maximum, they're doing minimum viable product rather than maximum viable progress. If everybody seems in the finance industry to wait, to cross-check, do we know enough? Is there enough data? Wait for the regulation. Whereas what you see when you get an incredibly bold leader, which I do see, and I certainly have seen in business, someone like Jesper Brodin, I'm going to name check now, from IKEA, or any number of the CEOs that have passed through Unilever lately, they look at their business, they look at the state of the world, the potential of their business, and they seem to go in at the maximum viable level. Like, what can we do in its entirety to fix this? Rather than what I see from the finance industry, which is to hang back and to go in the lowest possible disruption, risk, courage, frankly. This, to quote another great leader, in the movement, who is just, I hope, about to come and become the Prime Minister of Iceland, Halla Dottsmatir. Where is the courage? That is what I would challenge the financial industry with. We've got loads of data. You're all really clever. Where's your courage to take us into the future that you're really holding back?
Yeah.
I think just to hop in there, I think so much of it is because, to be really bold and to deliver some of those solutions, you need to think about all stakeholders, not just shareholders. And so many of the financial institutions that we're all so used to dealing with are focusing on shareholder benefit only. So, I think we need to broaden our outlook for financial services to have any meaningful impact on climate change and ESG. And there are banks and financial institutions that have been doing it for years. Triodos is a great example, and they do it really, really well. And there are many other types of different financial institutions. If you look at some of the community banks in the US and building societies in the UK, some of the sort of transition towns, those movements with their own currencies, they're doing bold things, and they're making changes. But to go back to the earlier point, it's just not happening fast enough. And I agree with you, Gail. I think a lot of it is perhaps that they're too beholden to the risk and the, structures that have been in place, the legacy systems that are holding them back.
But the bit I find weird about this whole shareholder stakeholder debate, which I agree with you, is possibly, if you look in a slightly narrow way, the problem. They're not looking at the wider stakeholders, the planet, the customers. They're looking at their shareholders, the people that are going to get rich out of this. But increasingly, and like I said, these are clever people. The shareholders are not going to get rich out of continuing the way they're continuing. I don't know, we're sat here recording this in the UK, in the soggy UK, as you say. So let's take a water example. Thames Water's not done very well, has it, for its shareholders right now? It's like a catastrophe because no one has thought about the environment, the people who are reliant on that environment, like water, so that's everyone. And the business is in a catastrophic state. It is probably going to fail and have to be taken over by the government. So if I was a shareholder in that business, not forget being a stakeholder, which I am, because I love swimming in rivers and I don't like being made sick, but as an actual shareholder of that business, I'd be furious. Like, you have mismanaged this catastrophically. And you look at any of the bigger instruments around the world that are at play, insurance, the shipping industry, that is totally up, as it were, creek, because people aren't taking into account the environmental impacts of, say, draining the Panama Canal every so often to get big ships through. But if you haven't protected the land around it, you're not going to have any water left to put back in the canal, so the ships aren't going to work. Your business is going to at least suffer, if not fail. So it feels to me like almost we should stop saying, think about the stakeholders, because that still feels a little charitable, like pity the poor people who aren't making any money but might do badly out of this. It's more like, guys, your business is on fire if you don't reform this really fast. And I feel like that, again, there's this vision is lacking, this breadth where people have to understand that every single aspect of business, money, your life is on the line now. But good news, guys, you hold the keys, because if you could release the capital in the right ways, if you could enable the right investments to be made, if you could do longer term investing, impact investing, then we'll get somewhere really fast. When money moves, it moves really quickly. I mean, looking at what happened after COP26 and Glasgow and all the great work that Mark Carney did to really galvanize the finance sector for climate, that's now off the charts. Progress in solar, progress in all of that kind of renewable sector. Brilliant. We now need the same for nature. We need the same for water. And then we probably somehow need to get to the same for people, though I think that's kind of more complex right now.
Yeah, and I think you both have touched on some really important things. I think particularly there's been so much, I definitely read so much content around, well, sustainable is good for business, like it's such a great business opportunity. But when we talk about how quickly money moves, think about when SVB collapsed and the movement that was made there, how quickly finance was able to respond versus, and I suppose that was that immediate, oh shoot, something is happening now, we will see this impact, we worry about the shareholders, let's quickly pivot, versus the climate risk, I suppose, might feel more far away, and so they're digging their heels. And we've talked a lot about climate here, but really ESG is so much bigger than climate. You talked at the end there about, Gail, about people, and I think there's, we've started to measure climate much more effectively. We've got the different pillars, we can report on, carbon accounting has come on leaps and bounds, but how we measure how we're doing against all those other goals, and whether it's SDGs, whether it's about B Corp status, however you want to measure it, I think that lack of standardization is really impacting our ability to hold ourselves to account and hold businesses to account. Because if you look at IKEA, that's a really great business model, and it's sustainable, and it's also like looking to improve so many different social values. And so I suppose for me, one of the things I've not really seen is how strides beyond just climate and any activity towards that. I don't suppose, Gail, if you've got any thoughts around beyond just climate. I know at the moment climate and nature is the focus, but any more thoughts on that?
Oh, sure. Oh, completely. I mean, one of the campaigns that Project Everyone is involved in at the moment is a much broader move to try and get some reforms going at the World Bank level to see how we can better finance development in general. The SDGs, the S and the D, sustainable development. So that's got planet and people in there. And so there are absolutely ways that you can invest in and measure say women and girls or girls' education, because the more I'm so glad, by the way, this is an all-woman podcast talking about money. Hurrah! Doesn't happen every day. But if you invest in girls, there's plenty of tracking that shows that investing in girls' education, investing in women and communities in the developing world makes for much better economic outcomes. And so there's no reason in the world why you can't scale that up to do mega investing from at national level, at international level. Multilateral banks could make the finance case, put a bond up for girls' education, and have it come back with really good economic results. So they're there. Again, I just think we're looking at the world the wrong way on all of those potential investable products and pipelines. We're looking at it from a minimum viable as opposed to a maximum possible. And that's where I think we need to shift to. And then you just drop your goal in, whether it's kids, whether it's health. I think the other great thing about using the SDGs as a frame is the intersectionality of it all. So you see that if you invest directly in education, you're going to shift some climate outcomes. If you invest in women and girls, you're going to shift some economic outcomes. If you invest in climate, you're going to shift the health outcomes. And so I think using that frame, back to these guys are clever, they can do that. And there are measures available out there. There's examples out there. There's some amazing work being done by developing world countries. I often come across great examples in Africa of different governments doing really bold, radical, collaborative, new ways of financing transitions from A to B, whatever the goal. But some brilliant ones in education, also in nature and land. So they're out there. I really challenge any leaders who are listening to this and think, yeah, actually, I could do more. Then just, educate yourself, because there's plenty going on out there.
Yeah, and to that point, some stats on the investment piece. So US financial services firm Morningstar, we've got some stats from them. So over a period of 10 years, 80% of blend equity funds investing in sustainably outperformed traditional funds. So business case number one. Business case number two, 77% of ESG funds, so this isn't just about climate, this is ESG as a whole, that existed 10 years ago have survived, compared with 46% of traditional funds. So if we're talking about that long-term business goal, this is proving in the numbers that this is something that obviously pays off. So Lisa, you've got experience in a few different banks. What is your view on in the investment landscape, and what's shifted there with the rise of ESG? Clearly, there are some players who are actively involved, but still not that. We're not seeing that overhaul in the industry just yet, or do you see that coming?
I think there was a definite uptick. So, ESG in the fund management industry has been around for 30 years now. 25 years ago plus, Liontrust launched their Sustainable Futures Fund. It's still going really strong today. It's still performing really, really well. It is an absolute testament to patient capital. And I think once you remove that short-term shift, that's when the change starts to happen, because these are huge problems and they can only be solved if we take the long-term view, and that's what these funds are trying to achieve. I think in terms of the market, you're absolutely right. There was an uptick, as I said, a couple of years ago. 2020, we saw huge numbers of funds and asset managers jumping on the bandwagon, which of course creates its own problems, which we could come on to discuss in a bit. But in terms of performance, like all equity sectors, the funds over the last few years have had a tricky couple of years. But again, you go back to the long term. If you're investing in something for a short-term gain, it's really not going to serve you well, and it's not going to serve the needs of your children well and your children's children. So that's the kind of view that we need to be taking, and exploring those solutions and looking at the types of instruments and funds that are really, delivering the solutions that will solve those problems in the future. So whether that's, in the healthcare side, obviously tech for good, those types of investments.
Yeah, and you have moved on to children, the younger generation. And really that's such a huge shift from where we are, because we're starting to see a real change in mindset as some of those millennials, Gen Z now become the top earners, and they have a real say in where their money goes. So a study in KPMG, I love this study, I quote it all the time, 49% of millionaires, which as a millennial, I'm stressed that other people are millionaires, but we don't need to talk about that. But they make their investments based on social factors, and millennials are twice as likely as older generations to want their pension to be invested responsibly. So we're starting to see a lot more of an intentional shift and concern from consumers. Lisa, this is what Xero is all about, I guess, like trying to bridge that gap. So what about that gap attracted you to the space, and where do you see it going?
You're absolutely right. That is exactly what Xero is all about. Look, there's a bit of a gap in the market when it comes to banking and financial apps for consumers in the UK. So you've got banks like Triodos and Cooperative, Nationwide, Ecology Building Society. You've got some really great sustainable financial services providers doing great things and achieving great things. And then you've got the neobanks like Monzo, Starling, doing brilliantly on the digital side. They've got a great digital interface, loads of the younger generation of customers. There isn't really anything that brings the two together. So that's what we wanted to do with Xero, because, like you said, we're recognizing that this younger generation of financial consumers are going to grow up, and they're going to be the ones that are needing loans in the future, perhaps wanting to take out mortgages, but also just to really, they will be spending differently. We need to unpick some of the data around how this next generation of consumers are spending. Are they more engaged in the circular economy? Are they, kind of doing things a little bit differently to perhaps my generation, some of the older generation? But we do know that you're absolutely right. As you said, they spend more. They're much more likely to spend more on sustainable brands. They will actively seek out sustainable brands. I think I read a stat that 24% of them will be willing to spend more. 73% will be willing to spend more on sustainable brands. But Xero, we're not going to charge people more. We want to deliver absolutely everything the same as the rest of the neobanks, but with that sustainable focus at our core, and really help our customers understand what it means to be sustainable with your money, because money has got the greatest power to make the greatest change. So I think Richard Curtis also founded a movement called Make My Money Matter. And they did some fantastic research a couple of years ago that proved that if you can shift your money away from, in the UK, the big 5 fossil fuel financing banks, and, just on that, over the last couple of years, banks such as NatWest and Lloyds have made great commitments to say, we're going to start shifting some of our lending away from fossil fuels. But actually, it turns out that they're still financing Ithaca, which is funding the Rosebank oil field. So, if you take the decision to understand the power of money and how your money is used, it's not just what you're investing, although that is obviously one element, and your pension is one element, but your money that comes into your bank account every single month in your salary, that has power. And where you choose to spend your money has power as well. So just to go back to that stat from Make My Money Matter, I think they said that if you move away from the fossil fuel banks, your money has 21 times greater reduction in carbon footprint than giving up flying, switching to a vegan diet, and a couple of other sustainable lifestyle changes.
Yeah, I now bank with Monzo, so I feel very good about myself. Gail, just to wrap this segment up, you've obviously spoken about what we've seen with current shareholder value for people who aren't necessarily doing this so well. So, Lisa's made some really good points about where this gap is at the moment. What could you summarize what you think the impact of not caring about ESG is in the future for maybe the big institutions who aren't making these changes, whether finance or broader?
I suppose there's 2 levels to answer that on. The meta level is good luck if we're not changing some of the, for all of us, if we're not changing the way that the biggest institutions in the world manage the most money in the world, then there isn't going to be a world. So that, I mean, and I do think that's sort of so enormous and existential that people can't get their heads around it. So I think then you have to come down a level and say, as a business, with a chunk of money, if you're managing it the wrong way, like examples I was referring to earlier, you won't have a business left because like Thames Water example, it's going to go really horribly pear-shaped really quickly. That quote about change happens slowly and quickly. I feel like there's been slow, and then suddenly these businesses are going to find themselves really struggling. And then the other level to it, I guess, is where Lisa's operating and talking about, you will no longer also have willing customers because people won't follow brands that are obviously doing the wrong thing for their futures. I mean, I grew up where Barclays was the bête noire because it was still investing in South Africa, which at the time was still supporting apartheid. I think climate change, fossil fuel investments is the new apartheid. And so many banks are being caught out and people are just not going to give them their custom. So I think there's sort of three levels to that.
I think I absolutely agree. I think there's still a huge challenge to really, it's a big ask of people in the UK to get them to think about what is happening with their money. Because as an amazing stat, you're more likely to get divorced than you are to switch your bank.
Oh my God.
And
I know. It's true. I'm still with the same bank I was with when I was 18 years old because they gave me a mortgage, because they gave me an overdraft then. They're rubbish. I'm not going to name them, but they're completely rubbish. But and I've also opened a Starling Bank on the side. Yeah. But it's kind of, I know it's true.
Make the switch. It's so easy now. Honestly, I
have. I've got a functioning Starling account. It's just that I can't quite bring myself to break with the past. But we don't teach people. There's no. I was talking to Steve Waygood once about this. Who's done so much good work from his perspective in Aviva. And he said, God, could we not please do a financial literacy kind of basic module for kids, this is for young teenagers, because people don't understand the finance system. They don't understand the cause and effect of what banks have and what they do. And I feel like if they understood the basics, then we would have if that's the lever really to go in at, I would say, as well as all the campaigning.
And that kind of lack of understanding and inertia has worked in the favour of, the status quo and the banks who continue to finance fossil fuels and make huge profits on the back of it. So yeah, absolutely has to start with education.
I'm sure we could talk about everything that is wrong around this, but we have a whole other segment coming up where we start to look at it more broader, the wider implications and what great initiatives are starting to come up and how they can influence some real change around the world. So it's all coming up after this really quick break, so don't go anywhere. Welcome back to FinTech Insider Insights, where we are discussing ESG and what financial services are doing to create a more sustainable industry and indeed a more sustainable world. So at the start, we talked a little bit around the investment into ESG, how we'd seen some of the returns paying off and the funds really lasting a really long time. So are we starting to see some of this investment into ESG translate into tangible benefits for customers? So Lisa, I'd love to start with you. Obviously, Xero is a new and emerging fintech. Are you starting to see more of this investment paying off into initiatives that customers can actually take a hold of?
Yeah, I think at Xero, certainly, we've got a vision that we want to see money used for the good of the planet. And that means that our money is being used well for all of us. So we all stand to benefit. And it's not just the financial benefit. We need to think more broadly about really, it's not just the pounds in my back pocket, although obviously in times of, cost squeeze like we've all just been through, still going through at the moment. That can make an impact, and we do sort of look at the benefits. So as I was saying earlier, we've got our sort of digital business core banking benefits and product benefits that will work for everyone. And then it's asking our customers to think a little bit broadly, a bit more broadly about how their money is being used, which will really start to benefit them in a more holistic way, and good for the planet, obviously, as well. I think it's something that we have to do. So it's not just a nice to have. It's not just because, we think people need it. Climate change is happening, and the generation of customers that we're reaching out to, they need to build a better understanding of their place in this shifting system and the whole shifting system of the world, because what has happened and what has gone before will no longer be the case. So we won't have the same interactions. Financial services won't work in the same way. If you look at insurers and flooding and some of the bigger risk management kind of challenges that are going on at the very top levels of the industry. But how does that trickle down to you as a consumer? And, you think about, well, if I've got a house on a floodplain, I won't be able to get insurance. What will that do to if I want to sell my house? So it's the education that we want to tackle as well. So not only education, as we were saying earlier, about on financial services, but education about all of us having a role to play. Yes, obviously governments and corporations have a huge role to play to really shift the dial. But if we don't sort of collectively get together and take some decisions to look at how we engage with all of our lifestyle elements, then nothing is going to happen. And I think, as Gail said, there won't be a world for us to live on. I think the only other point that I would like to add is Hannah Ritchie from Our World in Data has come out recently with this challenge that says we're the first generation living with the consequences of climate change, but we're the last generation that can do something about it, really, because otherwise it will be too late. So that really is the benefit. The more holistic benefit is how do we work within this system that is changing, and how do we each play a role within that?
Yeah. And I suppose the UN Sustainable Development Goals it's been a really helpful tool for organizations, at least, to pick a specific area, to understand it in more detail and create an initiative around it. Gail, you've obviously done a lot of work in this space. But I suppose my question is it feels very industry focused, it feels very company focused, but how do you see that there's a way to make more progress towards those goals by bringing more consumers in? And how do you think organizations should use their relationship with consumers to help drive that progress forwards?
Well, it's a massive question, and it's a question that we've been debating as an organization since the beginning. Like, what's the role of individual public action versus the role of leadership by a relatively small amount of people? What we did a post recently on one of our social channels saying, but what can I do? Said 7 billion people. And it did really well, because it's true that, mass action is going to achieve something. And it remains also true that we were talking earlier about the need for very courageous and bold leadership at the top of some of these institutions. Without that, it also won't happen. You feel we'll just all be fish swimming against the tide. And when you think about these enormous kind of polluters, if it's the oil industry, or destroyers, if it's, blowing up the ocean for a few more minerals, or, huge logging companies chucking down Amazon away, there's kind of nothing I can do with my sustainable bank card against that. So there has to be some form of sort of coming together and not shifting the blame onto individuals. I guess I feel really strongly about that. I also, as an older person now, no longer millennial, to put it mildly, I feel I resent on your behalf, Rachel, people going that they're going to sort it out. So that's brilliant. Yeah, they are, but they're dealing with kind of terrible interest rates in this country, really difficult prospects, total instability compared to when we grew up. So I feel like there's a generational thing that we have to do this together. And I think there's a citizen and leadership thing where we have to do this together. And I think that the two have an actually rather brilliant and symbiotic relationship, because certainly in the business world, you won't have a business if you're not pleasing millennials. And so that again, back to IKEA, they quite early on set up a youth council that literally mirrors their board and is quite robust. I shared a conversation with Jesper in Davos this year, and one of those youth board members was in the room, and it was great to see, both confirming, that was a proper activist up against a proper CEO, having a really positive dialogue about how to engage together. So I think the together thing is really, really important. And just one more thing to mention on that generational thing that is interesting. I read this weekend that we are facing the biggest single transfer of wealth between. Did you see that? But I think it was
we
in the
love
FT.
talking about the great wealth transfer here at 11FS. It's so huge, and no bank is talking about it.
No. So one of the pieces of work I'm doing is in the financing for nature space, and it's about this getting to the privately held wealth and trying to convince them to just put a portion, very small amount, 2% of assets under management to go to nature. It's called Nature 2, because that would completely close what has been identified as the funding gaps for nature to set the planet at a natural resource level back in the right direction, just 2%. And that, in a way, is going to be enormously facilitated by this wealth transfer, because you speak to younger people, and by that I mean people in their 40s, younger wealth owners who are like, yes, I do want to restore the ocean that I love, sailing on or surfing in. And yes, I do want there to be snow on my mountains. And I really do want there to be, beautiful forests and grasslands for me to kind of play in or visit or whatever. So I think there's a huge coming together that both needs to happen, but that is happening. And that is on many different levels, us with nature, generationally together, citizens with leaders, and just also then in the humans level, with each other. We need to, because look at how fractured the world is at the moment, how many conflicts are going on. So there's a great kind of, if we could engender the great coming together, then I think that would get us a long way down the line.
And to that point about like collective and bringing people together, Lisa, we have pulled from your website that you have pledged 20% that your company will be owned by customers. So, obviously that's a little bit of putting customers in the shareholders' shoes, like giving them more say and more control. But what prompted that move? Is it about distributing wealth or incentivizing people to join? What was in your mind when you put forward that pledge?
I mean, look, obviously the hope is that it will incentivize people to join, but it goes back to Gail's point. The strength is in the collective, and we really want to build this community that will help us collectively get where we need to be. And, we don't want to just take. We're building a business that is for the future. And as a business customer, as a banking customer, you have every right to have a say in what happens to your money and how it is used. So we hope that by building this community and engaging, our customers, giving them a say, yes, of course, they'll also hopefully benefit from, financially in the end. But our zero community options, it's a way to sort of include and broaden our stakeholder base. And it's that commitment to, targeting really a broad range of stakeholders and not just focusing on shareholders, because we're all shareholders and stakeholders in the planet, and we all need to do something about it. And if we can use that role as a bank and building and as a community builder, then why not do that? It's a pretty brave ambition, we feel, but we think that there's the space for it, and it needs to happen because, as I said before, your money and how you use it and who you bank with, it really does make a difference.
Yeah. And I love, whether it's this 20% of having customers being involved in the process, or the youth council and getting to hear from the young voices who are essentially going to make up the paying consumer base in a very short space of time, much quicker than we anticipate. I think these are some really good initiatives. We obviously know ESG is super positive, but it does take a lot of time and resources and money. And I think, Gail, what I've really loved is your framing of maximum viable progress. I'm definitely going to start using that. I'm a product manager and I talk about MVPs all the time, but I love that this idea of incremental steps, but maximizing what we're doing to create some real impact. So I guess in the finance space, what is it that banks can continue to do? What's working well, or what is the gap of that well, it's obvious, why aren't we just doing it? Beyond stop investing in fossil fuels, what are some of the initiatives that we think, or programs that we think could be successfully implemented? Lisa, we could start with you, and then Gail, maybe come to you after.
Yeah, look, I mean, we're a startup at Zero, and there's 12 of us, and yet from the beginning, I have invested my time in firstly measuring our impact on the wider world. It's a big part of what I'm doing. It doesn't take huge amounts of time. Obviously, as we scale, the amount of resource that takes, that will increase. But we've got to sort of put a stake in the ground and commit to something. Otherwise, what's the point in sort of trying to do what we're doing if we're not doing it in a sustainable way? So it is easy enough. There's so many free tools out there for financial providers of all sizes, if it's a startup through to a huge organization. And, look, there are huge numbers of employees working across all levels who want to be working sustainably. For financial services providers, it's great for their employee brand if they can showcase some commitment to ESG, not just the environment, obviously. But there are loads of tools available at varying degrees of costs. There are obviously incoming regulations, so that will mandate companies of different sizes in 2025. You have to report on ESG progress, and I think companies over 250 coming in 2026. So it would be remiss, and it wouldn't be good business if banks and all financial providers weren't already thinking about how they effectively engage in ESG and what strategies they're going to deploy. But, it goes back to basic carbon accounting, from an environmental perspective. What's your impact? Measure your impact, set targets to reduce it. Yes, in an ideal world, they'll be science aligned, Paris aligned, and then start taking steps to reduce it. It's not that complicated. And I think there's a tendency to so much talk around all the varying different regulations coming in, so many acronyms, well, what are you gauging in? This framework's better than that framework. Actually, we all know what we have to do. We just have to get on and do it. So I think progress really can be made. We've just got to start somewhere. And I'm sure, Gail, on the sort of S&G side of things, there are, significant changes coming into play.
Yeah, I mean, people could put some women on more, boards. That would be a start faster. But that's flippant. I mean, so obviously I agree with all of that. I would also put a sort of more like narrative lens on top of that as well, which feels to me that these things go on in the shadows, like that funny vampire show, What We Do in the Shadows. I think financial institutions need to come out, and they need to get out more. I'm a real fan of the citizen assembly movement, where you get groups of people cross sector, cross society to just talk things out. And I feel like institutions need to come into the real world much more often and really listen to what is going on and use that as fuel to change themselves and to give themselves that courage of leadership that we started at the beginning. I was struck by hearing someone talk about Citizens Assembly, a global one they did. And there were some, I think there were rural peoples, not indigenous, but rural, so not educated the way we are, not reading the FT, but learning at the same time as everybody else in the group the impacts of fossil fuel extraction, burning, carbon, climate change. And the simplicity of questioning, and it was a CEO that was talking about this because he'd been in the same group, the simplicity of the questioning that went, oh, so it's bad, then should we stop doing it then? He was just very disarmed by it. But I feel like there's a knowledge transaction, there's an emotional and a rational transaction that needs to continually happen with people in finance so that they don't stay in this minimum viable position and think that that's A, what people want, or B, that it's okay. They need, so I'd say, can they come out of the shadows and just engage with the real world as much as they possibly can? Rather than trying to hide from it and continuing to get away with as little as they can.
Yeah. And it's funny because when we talk about regulation in financial services, we're always like, why don't the regulators speak to startups and why don't they talk to us and why don't they have more forums so we can all feed into regulation and make it more suitable for us and what we're trying to deliver. But I think this is where suddenly the financial institutes find themselves in the hot seat, and it's like, well, what are you doing? And you should come out into the open and speak so we can all feed into this and make progress. And sometimes that collaboration that we see when it comes to lobbying regulators to or lobbying government to make progress, we don't feel that same willingness to come to the table when it comes to some of this stuff, I suppose.
I agree. It feels to me like the finance industry are the last to step up. They sort of, and I literally mean that in the both micro and macro, they're just sort of, obviously present company acceptedly, so you've stepped up many times. But in general, they'll move only and as and when everything else has been done, cross-ticked, laid out. Then there's a kind of standoffish and then they're kind of like, well, okay, then maybe here's like 10% change. It's very rare you get the finance industry going out front and going, okay, guys, I don't know how we're even going to get there. And it may or may not be the right thing to do, but intuitively it feels like this is worth trying. Where's the leadership coming from? Yes, there you go. As I say, present company accepted.
Yeah, but it's so true, Lisa. Wouldn't it be like you're here because you're working on this amazing fintech and it's so climate focused and it's so in the eyes of the consumer? But wouldn't it be great that if that wasn't that special? Like, wouldn't it be great if we're like, oh, yeah, Lisa, 1 of a million. Who cares about Lisa almost because it's the bog standard.
Absolutely, 100%. We map out these kind of questions like, wouldn't it be great if? And I think, very early on, we said, if all banks and financial institutions were sustainable. And that we also see that as part of our role to agitate for change. So to bring, we want to stir the pot a little bit. We can be agile, we can be nimble, we can be a bit cheeky sometimes with what we say. And we absolutely relish that opportunity. I think, the B Corp, just thinking about, what more established organisations can do. I think the B Corp framework is a great one. At Xero FinTech, we are at the very beginning of our B Corp journey, which is really, really exciting. And I think, there's lots, of course, there's debate around, they've accredited a couple of organisations that shouldn't really be accredited and question marks over some of the organisations that have been accredited in recent years. But ultimately, it provides a brilliant truly ESG focused framework for companies to target and, either build from the ground up using that framework, using that guidance, or as a kind of like, well, we've been operating in the space for 3, 4, 5, 10, 15 years now. Where are we? How do we need to shift to meet the needs of the future generations?
And I think it's such a good point because I remember with my last company, we were sort of looking at the B Corp process, and we were way too young to have any things to actually feed against, but it was just, this is what I need to know, this is what I need to be mindful of when I scale, and it feels like a great starting point for fintechs, for startups, or even for banks to have a look at it and understand what it looks like to gain accreditation. But my main takeaway is that in a year's time, Lisa, we won't want you as a guest because everyone's going to be doing what Xero does, and so we won't be as pressed to find people trying to make those changes in the industry. And that wraps up today's discussion. And of course, we would always like to have you on the podcast, Lisa, because it's been some great contributions today from yourself and Gail. Thank you so much for joining me both. I've had such a wonderful time talking about some of this stuff. If people wanted to find out more about you all, where would they go? Lisa, let's start with you.
You can go to find out more about Xero to xero.co.uk. We are on Instagram and LinkedIn as well, although not particularly active yet. But yeah, I think one of the things that I would just say as well is, go to our waitlist, and the way that we are going to deliver this collective change and we can play a more active role is by talking about what we're doing with our friends and our families. Don't be quiet about your new discovery of a new financial services provider called Xero, tell everyone.
Amazing. And Gail, what about you?
I am personally quite chatty on LinkedIn. So look up Gail Galley on LinkedIn. And then for the goals, that the sites that we channel all the work through is globalgoals.org. And the Instagram channel is by the same name and very perky. I believe we also have a thriving TikTok channel. I'll be honest, I'm not in charge of that one.
No, that's great stuff. And you can find me and Rachel Pandian on LinkedIn, or obviously here at 11FS. Thanks for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider, or email podcast@11fs.com. Thanks very much. Goodbye.